Hi guys, very good evening all of you. So welcome back. I wish you a very happy and prosperous new year 2022 and let us start first lecture in the new year. So this is first lecture for me in the new year and I'm sure this is first lecture for you also in the new year, isn't it? Okay, shall we start? So we are starting with risk assessment and internal control. We are starting with risk assessment and internal control. Put the heading. Chapter number 3. Put the heading risk assessment and internal control. One bad news. What bad news is that, in our quick referencer, ICA has prepared one quick referencer, no? In that this chapter is not there. That means we need to read from original material, 56 pages. But there is one good news. There are actually two good news. One is, you can refer to CA intermediate quick referencer where the same chapter is there. If you remember the first three chapters, no, in CA intermediate and CA final they are same. For example, audit planning and strategy, audit planning program, audit strategy, then risk assessment and internal control, chapter 2 and 3, and one standards on auditing. Then fourth chapter onwards, special aspects in audit of automated environment. From there you completely see difference between CA intermediate and CA final audit, because that is where the aeroplane takes off. Takeoff really happens in fourth chapter. 1, 2 and 3 they are kind of revision only. When you open ICA study material for CA final, chapter 1, chapter 2, chapter 3, they are like warm-up exercises. They are like warm-up exercise. So even if you have strong basics from your CA intermediate level, these three you can do self-study also. But I will teach you certain things in this, not that I am leaving this for your homework, because I know what nature students normally have. If I say homework, go Govinda. So they will not even touch the book. So we will read it. And I have also opened here quick referencer. This is CA intermediate quick referencer. Not that we are studying from CA intermediate. We will study from CA final level only. But for reference, if you want, this audit strategy planning and program is there. No, this one and audit documentation and this risk assessment and internal control. This two you can do from here. And also bank audit is there. No, bank audit also you can do from this. After that you have to go to advanced topics, because in CA intermediate also bank audit topic is there. In practice also you might have done bank audits. So bank audit is not such a big deal, because already you studied maybe 60%, 50%, 60% of bank audit in CA intermediate, and I'm sure every articled assistant might have gone to bank audits and you might have learned something. So from here bank audit we can learn. Audit report also we can learn from here, but anyway audit report is given at CA final level also. Okay, the charts are there for CA final level also. And then audit documentation, audit evidence, this is also there in CA final, standards on auditing. And audit strategy planning and program, this is also there, chapter 2. And the only thing is nature, objective and scope of the audit you don't need to open, because that is not there in CA final level. That's all. Okay, so this is where we are today. This is where we are today, but this is our primary document. What we are going to study is this one. So open ICA study material, chapter number 3, page number 1. Chapter number 3, page number 1. First let me go to the end of material. End of material. Before that, questions they have given, no, test your knowledge questions. Before that they have given some A, B, C, D, E. Let us see by any chance these are international frameworks. Okay, this was not there in the earlier materials. If you open the earlier CA final materials, this was not there. Okay, now at the end of the material, when you go to the 45th page, there is something called International Internal Control Framework. CASO, COCO, all these things were discussed here. Do you remember? We have completed CASO framework already. Do you remember? I have given you some good briefing, not just like basic introduction. I have given you good understanding about CASO framework. You remember? Now, overview of different internal control frameworks that are followed internationally given below. First one is integrated framework issued by CASO, Committee of Sponsoring Organizations of the Tradeway Commission. Okay, so the framework includes 5 elements. So Susan, can you turn on your mic and say good evening? Hi Susan. Hello. Susan, I am unable to hear you. Are you speaking? I don't know. Adarsh, can you turn on mic and say hi, please?
Hi, sir.
Hi, Adarsh. How are you?
Good, sir.
Superb. So, Adarsh, how many boxes are there here? Columns?
5.
5 columns. What are they? Can you read them?
Control environment, risk assessment, control activities, information and communication, monitoring.
Okay. What are these 5?
These 5
For
are
5 components of internal control. Correct?
yes.
That is what you have even seen in 315 also. In your CA intermediate also, you have seen same. So, under this 5, they have given some bullet points. Here, 5 bullet points, 4, 3, 3, 2. So, can you add the number of bullet points and tell me how many? Can you please confirm whether it is 17? Guys, all of you, can you just, count and tell me, confirm whether they are 17?
Yes, there is 17.
What is that? These are called 17 principles of internal control. These are called 17 principles. So what are that 17 principles? See, this is not part and parcel of your CA final syllabus. At the end of material, they have given you some references. That means indirectly ICA is saying these are the base materials based on which we have developed content. So just we'll read the 17 principles, no explanation required. We are not going to extend our discussion on this. Just say hi and then we'll go further. Okay, so Adarsh, can you read?
Control environment demonstrates commitment to integrity and ethical values.
Okay.
Exercises oversight responsibility.
Okay.
Establishes structure, authority and responsibility.
Okay.
Demonstrates commitment to competence.
Super.
Enforces accountability. Risk assessment. Specifies suitable objectives.
Okay.
Identifies and analyzes risks. Assesses fraud risk. Identifies and analyzes significant change. Control activities. Selects and develops control activities. Selects and develops general controls over technology. Deploys through policies and procedures.
Okay.
Information and communication. Uses relevant information. Communicates internally. Communicates externally. Monitoring. Conducts ongoing and or separate evaluations. Evaluates and communicates deficiencies.
So this is basically CASO framework. Whatever is included in our study material above, that we will see. We don't need to spend time here. The same points were discussed inside the material. There we'll spend more time. Do you remember I told you what are the objectives of internal control, Adarsh? As per CASO framework, there are 3 sets of objectives, goals. Do you remember I have explained 3D, 3 dimensions of CASO framework? In that I told you why internal controls are required. The answer is internal controls are required to achieve the objectives. What are the objectives and goals? There are 3 objectives and goals. They are operating goals or operating objectives, compliance objectives, finance objectives. You remember financial objectives? Guys, all of you, please respond. Do you remember? Very good. That is this para. Adarsh, can you read this?
Starting from the CASO framework.
Yes.
The CASO framework is designed to be used by organizations to assess the effectiveness of the system of internal control to achieve objectives as determined by management.
Okay.
The framework lists three categories of objectives as below. Operations objectives related to the effectiveness and efficiency of the entity's operations, including operational and financial performance goals and safeguarding assets against loss.
Okay.
Reporting objectives related to internal and external financing and non-financial reporting to stakeholders, which would encompass reliability, timeliness, transparency, or other terms as established by regulators, standard setters, or the entity's policies.
Okay.
Compliance objectives. In the framework, the compliance objective was described as relating to the entity's compliance with applicable laws and regulations. The framework considers the increased demands and complexities in laws, regulations, and accounting standards.
Correct. So this is just a revision. Already we have discussed this, in one of the sessions earlier. So shall we move further? And then there are certain limitations of internal controls. This also, Okay. Then second guidance. So the first guidance is taken from COSO. Second guidance is COCO. This is published by Canadian Institute of Chartered Accountants. This is called Guidance on Assessing Controls, published by Canadian Institute of Chartered Accountants. So that criteria they have given one small para. After that, it is called COBIT, Control Objectives for Information and Related Technology. Okay, Information Systems Audit and Control Association, they have developed this. They have given one small para about that COBIT. Then internal control by Chartered Accountants of England and Wales, ICAEW, that they have given in D. And Sarbanes-Oxley Act. Oh my God! Do you remember SEC, Sarbanes-Oxley Act, SOX compliance we say, and then PCAOB. We have discussed about this also, and I have given you assignment also. Read about this. Okay, with this, ICI study material part of this particular chapter is over. Then they have given test your knowledge. Okay, so now we are going back to the starting of the chapter to see what is there inside the chapter. Okay, again I am telling you, many things are basics. You might have covered a lot of things in your CA intermediate also. But normally when you are attending CA final audit classes, no, almost 2-3 years ago you might have read CA intermediate audit. There is a possibility. Huge gap, 1 year, 2 years at least. Point number one. Point number two, even if you attend CA intermediate classes yesterday also, you will forget, no. So because of this 1-2 reasons, or sometimes, maybe little more might have been included in CA final syllabus than CA inter, though the question is same, chapter is same, content is same. So in CA final some additional points will be given. So all those things we'll see. Now if you look at this diagram, audit risk, already we know. Okay, how many components of audit risk are there? Hello? How many components of audit risk are there? 3 components. What are they? Inherent risk, control risk, detection risk. Inherent risk, control risk put together is known as what? Hello? I am waiting for your answer in the chat. Inherent risk, control risk put together is known as RMM, risk of material misstatement. Correct. Then risk-based audit. Put a star mark, important question. What is the risk-based audit? We'll learn. Then internal control system, nature, scope, objective structure. Here we'll not spend much time. Copy paste of your CA inter. Then components of internal control. Copy paste that 5 components. Review of system of internal controls. We'll spend little time on this. Manner of evaluation of internal control system. Narrative record. Then checklist. Then questionnaire. Flow charts. We'll spend some time here also. Internal control and risk assessment. Here also we'll spend some time. Framework on reporting of internal controls. Reporting to clients on internal control weaknesses. Here also we'll do. There are 2 types of reporting. One is reporting to management. Second one is reporting to those charged with governance. Okay, like 260, 265 kind of stuff. Okay, so this is what the total scope is, total scope of the chapter. Okay, now Adarsh, can you read this first para?
Risk assessment assesses the level of risk in the various business processes. Risk assessment focuses on the business environment, regulatory environment, organization structure, organizational and business environmental changes, and specific concerns of management and the audit committee to determine the areas of greatest risk.
Yeah, so we also need to learn one thing here, okay? We also need to learn one thing here. There is something called ERM. What is that? ERM. ERM stands for Enterprise Risk Management. This ERM is also given in CASO. ERM is also given in CASO framework only. Extension, little extension. So if internal controls is this, ERM is this. So we can say that internal control system is part and parcel of, an integral part of, internal control system is integral part of enterprise risk management. Okay, so let us learn something about that enterprise risk management now. Before that, tell me one thing. What is the meaning of the word risk? What is the meaning of the word risk? So have you heard this word risk? You might have, I'm sure you might have heard risk in many places. Even in your SFM also, you might have heard so many types of risk. For example, credit risk, foreign currency risk, interest risk. Okay, and in your CA intermediate also, when you are studying leverages, you might have studied business risk, operating risk, financial risk, combined risk, overall risk. Correct? So you might have studied so many things. And also in capital budgeting, after that, you might have studied this risk analysis in capital budgeting also, certainty, equivalent coefficients. So from that basic background, if you recollect risk is any event or transaction that affects the ability of the entity to achieve its goal or objectives. For example, in Jan 2022, we have planned to produce 1 lakh units in our Chennai factory. In Jan 2022, we have planned to produce 1 lakh units in our Chennai factory. So this is our, one of the functional level objectives. Production is a function. Production at functional level, this is your objective. You understand? Now tell me, can this objective be affected by any of internal or external events, or with some happenings? Okay, now tell me, what are the factors? You tell me, what are the factors? Okay, one guy is saying machine failures. Okay, yeah. Machine failures is what Adarsh is saying. Sachin is saying strikes. Okay. Labor strike. Okay, you know this Kitex group, na? Guys, do you know Kitex group? Who knows better than you? Kitex is from your place only, no? Have you seen how much of nonsense happened? Everything is because of this labor strikes or undue pressure from departments. That is what they are saying. Undue pressures from various departments. And labor, issues also are there. Next, some other guy is saying lockdown. Okay, lockdown, agreed. Then any other factor? Can I say fire accident? Fire accident. Lack of availability of raw materials. Okay, reason is saying lack of availability of raw materials. Okay, surprisingly, how come today all the answers are given by boys? Normally girls give answers, boys keep reading, no? Hello, my dear women empowerment team, what happened to you? So, what the entity has to do is, anticipate the risk, assess the risk, anticipate the risk, assess the risk, manage the risk. That means try to mitigate, eliminate completely. If you can't eliminate, outsource it. If you can't, take steps so that the damage is least. This is called enterprise risk management. This is a part of enterprise risk management. Why did we spend time on this? Because internal control system is an integral part of ERM, and ERM is much broader term than internal controls. They are not different. So if you read enterprise risk management and if you read internal controls, you will come to me and say, Pavan sir, I read this page, so many things are common, Pavan sir. The objectives of ERM, the objectives of internal control, there are so many commonalities because enterprise risk management includes internal control, obviously. You understand? Now, with common sense think, can we do something for machine failures? Can we do something for machine failures? What can be done? What can be done? This is called preventive maintenance. Give AMC contract. Give AMC contract to one engineering company. Engineering company will come and maintain your machines, or you have a maintenance team inside the company. If your company is a big company, hire few engineers, then give some laborer to them, give some supplies to them, let them maintain machines so that machine failures can be minimized. You understand? Don't use them beyond their expected estimated life. Like some companies use lorries. Initially when they buy lorry, they expect that we'll use this for 6 years, 5 years, 7 years. But now the lorry is 10 years old, still you are using. Machines also, 20 years back you purchased a machine, still you are using, so failures will be more. Replace them at optimum interval. Then labor strike, agreements with trade unions. Give what they want, give good facilities to them so that they'll not come with red flag or black flag. Lockdown, you can't do anything because this is outside your control, but still for lockdown also, business recovery, business continuous plans you should have. For lockdown also, you can still have business continuity plan. Do you know many businesses have grown left and right during lockdown only? You can't even imagine how much of growth businesses have seen in lockdown. People feel lockdown is disturbing economy and industry. Actually, no. Initially, see, investor sentiments will be affected. So if lockdown is there, stock market will fall. But nothing will happen to businesses. Some businesses are affected, not all. Some businesses are affected, not all. Especially during this last 2 years, have you seen how pharma companies have grown? how e-commerce companies have grown, how online transactions have grown, how this hospitals and medical care has grown. Phenomenal. So fire accident. What will you do for fire accident? So fire safety equipments internally. Fire safety equipment. What is wrong in this? Equipment. Fire safety equipment. Then insurance. If you can take insurance, you are outsourcing the risk. Someone else will take care of your risk. Lack of availability of raw materials. Have multiple suppliers. Enter into contract with them. For example, Toyota kind of company, do you think they'll enter into agreement only with one company for supply of tires? No, they will have 4 or 5 suppliers. If one is not listening to them properly, they will change the supplier. Next second, tires will come. So this is the role of risk assessment team. This is what we are going to discuss today. You understand the backdrop? Hello? You understand the backdrop risk assessment? Now, is there any connection between this risk assessment, internal controls and audit? Obviously, if risk management and internal controls department is strong, if risk management and internal control department is strong, misstatements will be less. Simple. If internal controls are strong, frauds and errors will be less. Then I can reduce my extent of verification also. That is the reason I am interested in this. As an auditor, that is the reason I am interested in this. Okay, so they have given, risk factors, identify risk factors, what can go wrong. So they have given one small diagram. Just read that. External factors, nature of entity, entity's objectives, strategies, blah, blah, blah. Now this is very important area. Put a star mark. Very, very, very important area. And one of the most meaningful diagrams given in ICA book. One of the most meaningful diagrams. Okay, so look at the left hand side. Adarsh, read the left hand side, ma.
Inherent risk, control risk, detection risk, audit risk.
So, what is basically inherent risk? Now read this right side question.
Any material errors at all.
Any material errors at all in the books of account, in the financial statements, are there any material errors? So, can you say no? You can say no. You can never say no to this question. Any material misstatements, errors are occurring in the books? The answer is obviously yes. Obviously yes. The point is, if the error or fraud is happening, we need to ask a question whether our control system is able to catch them. That is the second question. If the control system is able to catch them, then there is no risk. Na? You have identified fraud before happening. You have prevented fraud. You have prevented error. Problem is when the internal control system is weak, ineffective, and when control deficiency happens, then this fraud, this error, this misstatement, circumventing the control, this black oval is there, no? That is control. Circumventing the control and entering into books without being undetected, uncontrolled. It came here. Now the question is, can auditor detect it? If the auditor can detect it, still there is no audit risk now. If auditor can detect it, internal control system was not able to identify this. Internal control system failed in detecting this. Internal control system failed in preventing it. Internal control system failed in correcting it. But whether when the auditor is conducting audit, whether the auditor caught this error, if the answer is yes, thank God, nothing is wrong. But if the auditor cannot detect it, then don't you think he'll give wrong opinion, inappropriate opinion? That is audit risk. That is audit risk. So basically, what is audit risk? Basically, what is audit risk? Audit risk is the risk that the auditor expresses an inappropriate opinion where the financial statements of the entity are materially misstated. Okay, what is the meaning of this? What is the meaning of this? One material misstatement occurred. Two, control mechanism failed to prevent it. 3, auditor failed to detect it. So, auditor gave inappropriate opinion. What is inappropriate opinion? Since material misstatements are there, the auditor should have given either a qualified opinion or adverse opinion, but he expressed unmodified opinion. This is audit risk. Now shareholder will ask, when the fraud comes out, eventually shareholder will ask, dear auditor, how much you took? How much you took from the management? You did not detect it. Now how much you took? That is the problem. So, do you understand this part and the meaning of audit risk? Okay, so shall we continue? Auditors components, I am not going to speak anything about it. What is inherent risk? The susceptibility of an assertion to misstatement. This in LKG you have seen. In LKG you have seen inherent risk, what is control risk, what is detection risk. Okay, these 3 things you have seen enough in your life. Okay, so for your satisfaction, read this. Audit risk is equal to risk of material misstatement into detection risk. What is the risk of material misstatement? Risk of material misstatement is the combination of inherent risk and control risk. So read this part. Though it is from CA intermediate level, definitions and key concepts will never change now. That remains same. So, Adarsh, can you read this, ma?
Risk of material misstatement may be defined as the risk that the financial statements are materially misstated prior to audit. Inherent risk, the susceptibility of an assertion to a misstatement that could be material before consideration of any related controls.
So, whether you have controls or no, inherently something will happen. Inherent means unavoidable. Susceptibility means prone to, vulnerability, the possibility of, the probability of existence. Susceptibility means financial statements are open to a material misstatement. Okay, now there are so many examples given for inherent risk, but the best example I have come across, I'll tell you. Best example I have come across. Consider you are or consider Apple Incorporation. Apple. So they manufacture and sell iPhones. Correct? They manufacture and sell iPhones. P capital it should be. Okay. Now imagine at present they have 12. What is the latest version? iPhone Apple 12 is there now. 13 is also there. I don't know. Someone is saying 13. Okay, 13. So present version 13. Okay. Now imagine Apple has 10 lakh phones manufactured and are in godown, in stores. Okay, in inventory. 31st March 2022, cost, say for example 30,000, net realizable value, say for example 60,000. Okay, or say cost 40,000, 45,000. Just numeric example. Need not make any sense. Numbers need not make any sense. So Apple phones cost is 45,000 and selling price is 60,000. I know it will be more than 1 lakh, but for the sake of example. So now valuation of inventory is equal to 10 lakh phones into, shall I take 45 or shall I take 60? Whichever is lower. So I'll take 45,000. That is equal to 45. So in 10 lakhs, 6 zeros are there. 1, 2, 3, 4, 5, 6. In 45,000, 3 zeros are there. 1, 2, 3. 1, 2, 3. Time. 1, 2, 3. Time. 1, 2, 3. So it is 4,500 crores. That is equal to 4,500 crores. Considering the size of Apple, this is one bekar, bakwas, nonsense example, because 4,500 crores is very less amount for that. Okay, but still, just say it is only, you are considering only one geography or one store. So 4,500 crores is the inventory. So on 31st March 2022, this accounting is done and audit is going on. On 15th April 2022, Apple announced iPhone 14. When the Apple announced iPhone 14, do you think this selling price is there? No? Do you think the selling price will increase or decrease? This NRV is nothing but the expected selling price, no? Estimated selling price minus cost to sell. So it will decrease. So do you think decrease will be little amount or drastic fall will be there? Drastic fall. I remember I was using long back 6S or something was there that time. I bought it for 64,000 rupees. I bought it for 64,000. After 8 months or 1 year, I do not remember, my friend who's a bank manager, he bought the same with 26,000. I'm like, are you kidding me? Same model. So by the time next generation comes, what 50% will fall. So now imagine subsequently NRV of iPhone 13 has fallen drastically. How much do you think assessment is easy? Assessment is very difficult. So Apple is entering into contract with Flipkart to sell at one price. They are entering into, some physical stores to dispose. This 10 lakhs is to be disposed now, left and right. Okay, they are selling it to one wholesaler at 30,000, one wholesaler at 32,000, one wholesaler at 28,000, one wholesaler at 40,000. So instead of 60,000, they reduced drastically and they are disposing it off. Now, as an auditor or as the management, can you verify the impact on NRV as on 31st March? You cannot. As on 31st March, what will be the NRV? Can you do any calculations? This is inherent risk. Now, if I put this amount in financial statements, can I say that financial statements are materially misstated? Value of inventory 4,500 crores is there in financial statements. You tell me whether 4,500 crores is correct answer. No. So there is a material misstatement. It should be lesser than 4,500 crores. But how much? Is it 3,900 crores? Is it 3,800 crores? Is it 3,200 crores? So sometimes even management cannot do anything here. Sometimes inherent risk is due to management's integrity, management intentionally doing fraud. Sometimes means even management is helpless. This is one example given in one of the foreign textbooks. Inventory value, when there is any technological changes or market changes or any new version came, because of the market conditions, if there is any drastic fall in inventory, it will be very difficult for you to measure what is the fall, how that is to be accounted for. For both management it is a challenge, for auditors also it is a challenge. You understand? This is inherent risk. No control system could have prevented this material misstatement. So there is material misstatement which cannot be controlled, which cannot be detected. You understand? So now read this control risk, Adarsh.
Control risk. The risk that a misstatement that could occur in an assertion and that could be material will not be prevented or detected and corrected on a timely basis by the entity's internal control.
So at final level especially, we should also understand what is financial statement level material misstatement or assertion level material misstatement. Correct? We should know what is the meaning of assertion level misstatement. Assertion level misstatement. We'll see in few minutes. We'll see that in few minutes now. So what is the misstatement they have given? I already told you the misstatement is the difference between what the amount should be and what the amount is. You call it classification, you call it presentation, you call it disclosure. How it is reported, how it is required to be reported. The difference between these two is called material misstatement. Now see this overall financial statement level, assertion level. Can you read these two boxes?
Risk of material misstatement at two levels. The overall financial statement level. Risks of material misstatement at the overall financial statement level refers to risks of material misstatement that relate pervasively to the financial statements as a whole and potentially affect many assertions.
Simple. ICA has given one super duper example for this. When we go back to ICA study material, there is one example. The accountant or the chief accountant or the head of accounts department is an incompetent fellow. No good knowledge in accounting. No exposure before. No good practical training also. So basically accountant is not, a strong guy subject wise. Now you tell me, will he make mistake in any one account balance or one class of transaction on one particular day, or do you think his errors can spread throughout the year, throughout many accounting balances and many class of transactions? So do you think in one particular area he'll do mistake, or he'll do mistakes left and right? He'll do mistakes in many places now. Yes or no? That is called pervasive to financial statements. Okay, that affects many assertions. Next, read assertion level.
The assertion level for classes of transactions, account balances and disclosures. Risks of material misstatement at the assertion level are assessed in order to determine the nature, timing and extent of further audit procedures necessary to obtain sufficient appropriate audit evidence.
Super. So shall we go to our final level and see? We'll come back if it is required. Now look here. Do you remember few days back I have given you this assertions? Class of transactions, occurrence, completeness, accuracy, cutoff, classification, balances, existence, rights and obligations, completeness, valuation, allocation, presentation, disclosure, occurrence, rights and obligations, completeness, classification, understandability, accuracy, valuation. Do you remember these things we have seen? This is there in CA Inter also. 315. Okay, so SCA 315 categorizes the types of assertions used by the auditor to consider different types of potential misstatement that may occur. Okay, now look here. They have given one beautiful chart. ICA has given one beautiful chart here. So here they said auditors are required to assess the risk of material misstatement at two levels. The first is at overall financial statement level. Second one is Second one is, see here, this is same. Potentially affect many transactions pervasively. These are the definitions used. The second one is specific assertion level mistake. Now I told you one example, no? That is this example. If the top accountant is not competent enough for assigned task, it is quite possible that errors could occur in financial statements. However, the nature of such errors will not often be confined to a single account balance, transaction or disclosure. In addition, the error is not likely to be confined to a single assertion. Single assertion, no, it is not confined to a single assertion. It could easily relate to many assertions. Not only the completeness is affected, accuracy is affected, existence is affected, valuation is affected. Now, the second one is this. For that, they have given one example. So, read these two parasma.
The second relates to risks identifiable with specific assertions at the class of transactions, account balance or disclosure level. This means that for each account balance, class of transaction and disclosure, an assessment of risk such as high, moderate or low should be made for each individual assertion being addressed.
For example, I'll give you one example, okay? There is one company primarily selling goods to other countries. That means exports. Okay. So there are 2000 sale transactions in a year. What is your reporting currency? Indian rupee. Reporting currency? INR. Billing happens in US dollars. Billings happen in US dollars. Okay, now if the accountant is continuously doing a mistake, that means he is taking wrong foreign currency exchange rate for accounting sales. Sales revenue is to be accounted for, no? So whenever you sell goods, invoice is, say for example, 8,500 US dollars. You need to convert it to Indian rupees and you need to write journal entry in Indian rupees, no? So instead of taking one exchange rate, he is taking another exchange rate. Say for example, instead of taking closing, he is taking opening. Instead of taking average, he is taking something else. Instead of taking exchange rate of one particular source, like you call it RBI or that Federation of Dealers. So instead of taking from one source, he is taking from another source. So here you tell me which assertion is affected. Do you think completeness is affected? No. Completeness not affected, because he is not doing any mistake in journalizing the transaction, no? Okay, so do you think occurrence is affected? No. Not affected. Now, do you think valuation and accuracy is affected? Valuation and accuracy, measurement of sales. That means, yes, it is affected. This is assertion level problem. So now when you look at this list, about transactions, do you have any problem in occurrence? No, transactions are occurred. Whatever Transactions occurred, he reported, he recorded. Completeness, no problem. Cut off, he is writing journal entry in the same accounting period, no problem. He is classifying it properly, no problem. So out of this 1, 2, 3, 4, 5, you tell me where is the problem? Accuracy. This is assertion level, and ICA has given excellent diagram again. Look here. So read this example, ma.
While considering the valuation assertion, the auditor could assess the risk of errors in payable as low. However, for inventory where obsolescence is a factor, the auditor would assess the valuation risk as high. Another example would be where the risks of material misstatement due to completeness, that is missing items, in the inventory balance are low but high in relation to the sales balance.
So now you tell me you have a client. You tell me you have a client. You are conducting audit. Do you think client will manipulate, either intentionally or by mistake, error? Do you think client will manipulate recording purchases? Or do you think client will manipulate sales? So you tell me, which one he will manipulate? Okay, purchase, if it is a related party transaction, that is a different story. So generally they do this. So as an auditor, you should assess what is high risk, what is low risk. Okay, and then see this diagram. See this diagram. So left side, if you see, financial statement level is there overall, then account balances, class of transactions, presentation and disclosure, assertion level, he has given CEAV, general knowledge question. C for completeness, E for existence, A for accuracy, V for valuation. Now he is taking some account balances. What account balances in current assets, current liabilities are highly prone? You know, you need to verify thoroughly. Inventory, cash, payables. So he has taken inventory, cash, payables here. Examples. Transactions are only two types of transactions. No, expenses, revenues. So expense, revenue they have taken. Presentation, disclosure, related party disclosures, commitments you need to disclose. Now capital commitments you need to disclose, commitments you need to disclose, need not be accounted for, but disclosure is required. So now he has taken 1, 2, 3, 4, 5, 6, 7. For all these 7 items, you need to tick CEAV. So whether any risk is there in C, in first item, whether there is any risk in E, whether there is any risk in A. So this commitments is there, no? Commitments. The highest risk is completeness, because they committed into 10 contracts, and if they are loss-making contracts, if they need to disclose something which is adverse to the company, they will try to escape, they will try to omit giving that para in notes to accounts. So completeness is the biggest problem here. For inventory, biggest problem is valuation. For revenue, fraud could be occurrence, there will be no occurrence. So like that you prepare this. So if risk is happening at this level, material misstatement is happening at this level, that is financial statement level. Like the accountant is ineffective, so everywhere the problem will be there. So the errors are spreading across pervasively. And at this level, if any risk is happening, that is called assertion level risk. Nice diagram. So guys, do you understand this? Hello? Okay. Then steps for identification of risk. They have given, So many things like this. So we'll not read all these things line by line. I'll give this work to you. Assess the significance of assessed risk, impact of its occurrence, also revise the materiality accordingly for the specific account balance, determine the likelihood of assessed risk to occur and its impact on auditing procedures, document the assertions, consider the impact, completeness, existence, accuracy, validity, valuation, presentation relevant to account balances, identify degree of significance. So they have given, some bullet points which you can read yourself. Now, indicators of possible potential misstatements. Indicators of possible potential misstatements. So, Adarsh, read this diagram.
Completeness. Transactions not identified.
This is funny thing, no? Transaction not identified at all. For example, supermarket, they are selling carry bag also. They are selling carry bag also. But as per local government regulation, carry bags should not be sold. So there are so many government orders. When you go to any supermarket, they'll give one bag. On the bag, their name will be printed, no? If the name is printed, they are not supposed to sell it. So there are some rules like this. They are supposed to give it free of cost. So in the billing system, what they have done, in the billing system, they have not included this 5 rupees. They will take 5 rupees per carry bag, no? They are not putting it in the billing system. Because government said, don't collect money. So if the customer says, hey, government asked not to collect money. Sorry, sir, 5 rupees, take it. But how many customers will ask? So the supermarket is taking 5 rupees. Okay, but do you think they will account for it? No, the statement only. No. Okay, so transactions not identified. Source documents not prepared. If source document only is not prepared, how can it be captured into the system? How can it be inserted, input into the system? How can it be fed into the accounting system? Rejected source documents not represented. So there is one source document, one transaction, you tried to capture it. So system rejected it. If system rejects it, you need to capture it again. No, you need to represent it. For example, you are buying some item in supermarket. So they have put barcode reader. Barcode reader rejected this product. Barcode reader said, I am unable to read what the hell this product is. What the billing counter guy will do? Manually he will input the barcode, no? Or do you think they will leave accounting? They will leave billing. So if any source document is rejected, that should be represented again. That is completeness. Read existence, ma.
Existence. Fictitious or unauthorized transactions entered on source documents. Source documents overstated. Transactions duplicated on source documents. Capture of source documents duplicated. Invalid source documents captured on subsidiary ledgers.
Continue.
Recording. Source documents captured inaccurately. Processing of transactions is inaccurate. Inaccurate adjustments made in subsidiary ledgers. Cut-off procedures. Transactions that occur in one period are recorded in another period.
So ICA is saying these are the indicators. Possible potential misstatements. So they have given one illustration. There is nothing great to read in this, but just since we have opened the document, I do not want to skip this. I'll give you 20 seconds of time, or how big this is. 30 seconds of time. Read this. I'll give you 30 seconds. Read this. Once you are done, let me know. Then we'll further proceed. Are you done? Are you done? So, do you understand what they are speaking about? So, others, do you understand what the example is?
Yes, sir.
That's all. See, they are speaking about validation of purchase order. How many audits you have done as an articled assistant? How many companies will follow a proper procedure for placing purchase orders, receiving goods, generating goods received note, then inspecting, then taking them into the godown, then proper printed bill of materials. Even some of the companies, public limited companies which are almost listed also, there are no proper control systems. Actually, if it is a company, they'll follow. If it is a company, they will follow. And especially when they have more branches and all, they'll have very strong internal controls. Imagine a small business, sole proprietor. Nothing will be there. Then the risk will be very high. Now imagine you are conducting audit of bakery, okay? How many items they will buy from suppliers to sell? Buying happens in cash, selling happens in cash. Do you think purchase order will be there? And those who sell goods also will be individuals. They will also not give any printed proofs or invoices. No purchase orders will be there. Everything unaccounted. Risk will be very high. Risk of conducting these kind of audits is really high. Isn't it? I have seen corporate hospitals, big hospitals. Big is a small word, that big hospitals. You go to some departments, they will say, sir, machine is not working, sir. Our card is not accepted, sir. Our Google Pay is not there, sir. Pay cash, sir. How much of the amount it is cash? If you argue, they will say, sir, here only ATM is there, sir. Inside the hospital, this is ATM machine, sir. You can withdraw money and you can give, sir. Have you experienced this? I have experienced many times. And that too, they are huge, big chains. Cash don't carry on. For sale of medicines, they'll not give bills also. Happens. Okay. Now put a star mark. This comes both in MCQ, case studies, and also it can be a descriptive question. Risk-based audit approach. Risk-based audit approach. Okay, so Sri Lakshmi, you have mic. Hi Sri Lakshmi, how are you?
Good, sir.
Superb. So can you read this risk-based audit approach? Have you while conducting any audit, have you done risk-based audit?
No, sir.
So, okay, so guys, remaining people, do you have any idea about risk-based audit approach? I'll give you one small example, not appropriate for risk-based audit approach, but it will help you in understanding, how the audit should be planned. Okay, so look here, you have debtors, okay? You have debtors. When you open debtors, this is debtors schedule. Name of the debtor, amount. Okay, here debtor is A, B, C, D. Like that you have 800 debtors. Total amount is 10 crores. So when you open the balance sheet of the company, you are conducting audit of the company. So in the balance sheet, they have written, debtors 10 crores. So for this is the schedule. Debtors schedule they have given. So how many debtors are there in quantity? There are 800 parties. How many debtors are there? There are 800 parties. Now you tell me, while conducting audit, do you want to get external confirmations from debtors or no? While conducting audit of debtors, do you want to get external confirmation from debtors or no? Guys, I want your response. Yes, very good. Everybody is saying yes, I appreciate. Correct. Do you send confirmation request for all 800 debtors? Do you send confirmation request to all 800? Are you mad? Have you lost it? Why the hell you are sending this? Now you tell me, what is the factor based on which you choose out of 800? Out of 800, how will you choose? Out of 800, how do you choose that these X number I need? These X number. So everybody is saying balance amount. Okay. Amount due. Okay. So is this the only factor? Amount due. Is this the only factor? So big amounts, confirmation, small amounts, no. Is this the only factor? So Mohammed is saying random. Okay. Okay. Randomly also you can pick. But randomly if you are picking, it is not risk-based approach. Number of transactions, do they really make any difference? Number of transactions, do they really make any difference? I don't think number of transactions should be considered here. What should be considered, you know? Related parties. Related parties, that is more important. But when it is related party, confirmations are not that reliable also. Because if it is my brother, I can say my brother, array, tell this, no. So my brother can lie for me. So related party transactions also are important here. And the most important thing is aging schedule, dude. Aging schedule. Long outstanding balances are important. Correct or no? Why? Because these long outstanding balances are there. No, this will affect the valuation. Maybe you need to create a provision here. Debtors is not 10 crores. If you look at some transactions, credit period given is 30 days and this debtor is outstanding for 320 days. Are you kidding me? What the hell this is? So don't you think you need to look at the aging schedule? Correct. Okay, then high credit risk. So for every debtor, you might have done credit appraisal. For every debtor, you might have done credit appraisal. Imagine a bank has given 100 loans, for example. But before 100 loans, every case they'll do credit risk. High credit risk files, you have to pick for confirmations. High credit risk. Is that all? Is that all? Now, when you take printout of trial balance, in Tally, say Mr. A or X Limited, some debtor is there, opening, closing, during the year additions, during the year deletions. So opening 0, here 1 crore, here 1 crore, here 0. So you are ensuring that opening balance, closing balance will not be there. That means on 1st April and on 31st March, this account will show 0 only. This account will show 0 only. What the hell this is? That means exactly you are selling on 2nd April and you are collecting money on 30th March. Are you kidding me? So don't you think you have to obtain confirmations from these kind of people also? You need to check extensively why there are no opening balances, closing balances. That is the reason when you are taking printout from Tally, no, you can give the instruction, include 0 balances also. Yes or no? Include 0 balances. I want to see. So these are the risk factors. When you are conducting audit like this, it is called what? Risk-based approach in auditing. That is what we are going to discuss now. Guys, do you understand what is risk-based audit? How to conduct risk-based audit? Do you understand? I have given one simple example. Okay. Who is reading? Sri Lakshmi. Sri Lakshmi, read more.
A risk-based audit approach. Audit should be risk-based or focused on areas of greatest risk to the achievement of the audited entity's objectives. Risk-based audit is an approach to audit that analyzes audit risk, set materiality thresholds based on audit risk analysis, and develops audit programs that allocate a larger portion of audit resources to high-risk areas.
Very important. So put a star mark on this. This is kind of definition. Definition. What is RBA? It is an approach to audit that analyzes audit risks, sets materiality thresholds, and develop audit program based on the risk. Larger portion of audit resources to high risk areas you need to give. You understand? That's all. Continue, Ma.
The auditor does not normally need to perform specific audit procedures on all areas of audit. He only needs to design audit programs and procedures on areas earlier identified as major risks that could result in the financial statements being materially misstated.
Obviously. Next.
Risk-based audit is an essential element of financial audit, both the attached audit of the financial statements and in the audit of financial systems and transactions, including evaluation of internal controls.
So they are speaking about two types of audits. One is attest function. Attest audit means statutory audit where you are expressing opinion. What is the first assignment? First engagement is financial audit. Attest function where you give audit report, audit opinion. Second one is evaluation of financial systems and transactions, like internal control evaluation. Even in internal control evaluation also you have to follow risk-based approach only now. Okay, continue.
It focuses primarily on the identification and assessment of the financial statement misstatement risk and provides a framework to reduce the impact to the financial statement of these identified risks to an acceptable level before rendering an opinion on the financial statements. It also provides indicators of risk as a basis of opportunity for improvement of audit risk management and control processes. This affords an opportunity to the auditee to improve its operations from recommendations or risks that do not have a current impact on the financial statements but impact the audited entity's operational strategies and performance over the longer term. In the context of performance audit, it is the risk to delivery of an activity or scheme or program of the entity with economy, efficiency and effectiveness. Awareness of areas that puts the program or the resources at risk from the point of view of economy, efficiency and effectiveness helps focus audit attention on them. This risk analysis provides a framework for assurance in performance auditing.
So, do you remember this performance audit? 3E audit, value for money audit, economy, efficiency, effectiveness. So, in that audit, they are saying these three are the parameters. Whatever affects these three is risk. Whatever affects these three is risk. So, they are giving audit risk analysis. Audit risks are brought about by error and fraud. Obviously, no, misstatement is because of error and fraud. So, error is an unintentional mistake. Fraud is an intentional mistake. Now, you have to ask, dear ICA, are you kidding me? All LKG level definitions you are giving. Then ICA will say, beta, first 1 to 3 lessons are basics only. No? So, they are speaking basics. Okay, so error risk, fraud risk, all these things you know already. We have discussed also in our classes. General steps in conduct of risk-based approach. 3 steps important. Read this one.
Assessing the risk of material misstatement in the financial statements. Designing and performing further audit procedures that respond to assess risk and reduce the risk of material misstatements in the financial statements to an acceptably low level. And issuing an appropriate audit report based on the audit findings.
So there is no, kind of rocket science behind this. If you remember, audit procedures are broadly divided into RAP and FAP, no? Risk assessment procedures and further audit procedures. So first you need to do risk assessment procedures, then only you design further audit procedures. No, that is the hell they are explaining here. First assess the risk assessment procedures. Based on that, design further audit procedures. LKG thing. If you can connect the dots now, auditing is very simple. So now do you need to by heart these three? What are the steps in risk-based audit? Oh my god, steps. Nothing. Remember this: risk assessment procedures, further audit procedures, audit report. They are these 3 points. Isn't it simple like this? So they have given in risk-based audit approach, risk assessment, risk response, reporting, big, too much of information they have given. Happily, whenever you are not feeling sleepy, open, read these things. In 2 minutes, you will sleep. Okay, so they have given something, just single reading you do. Single reading you do. For all this three, they have given 3 diagrams. Okay, then we will go to the next part, which is again basics: internal control system, nature, scope, objectives and structure. And the funny thing is, internal control system means all the policies, procedures adopted by the management of an entity to assist in achieving management objective of ensuring as far as practicable to orderly, efficient conduct of business, including adherence to management. Are you kidding me? What the hell this is? You have already studied this now in CA Inter, but still we'll see this third para. What is there inside this third para? We'll see. Before that, shall we take a break and come back? Shall we take a break?